Hello, income harvesters. Welcome back to the channel. Today is January 19th, and we are looking at a few new ideas for the new year because as we started the new year, a lot of things have changed, and in the last few weeks, a lot of new things have happened in the market, like the change in the trends and new sectors and new areas coming up. So, one of the areas that caught my attention was the precious metals, gold and silver. You hear that all over the news that gold prices are hitting record highs and silver has been surpassing its records for the last few decades or whatever. Like all these news items have been flowing all over the place, and people are crazy and they're trying to buy you know gold or silver. It's probably the central banks that are investing in the gold or silver bullion, or probably it's big institutions who are investing because of the fear of a kind of a slow down in the growth, or you know probably they also fear the US dollar losing its value. There are different factors to it. Like I'm not going into that in this video, but I'm going to discuss about this interesting fund which provides you exposure to gold, not just as a kind of a bet or a long-term view on the price of gold. Instead, you're also getting some kind of an income stream or a kind of income from the gold fund. So this is called the GLDW. This is one of the funds where this is called the Gold Weekly Pay ETF, and this is from the Roundhill Funds. Uh, the fund basically pays weekly distributions while also providing exposure to the gold prices. So that's the unique product that they have come up with. So let's uncover and see how it works, what are the pros and cons, and try to understand. Okay, let's look at the overview. Basically, the fund is designed for investors that are seeking a combination of income and growth. That's the fund's main, target audience. And basically, they're looking at providing weekly distributions equal to 1.2 times the return of the SPDR Gold. Okay, people who have been in the markets for like last few years, last few decades, for example, people who have been there for a long time are familiar with spider funds, SPY ETF, as well as the SPDR Gold ETF. So these are some of the most popular funds. SPDR Gold is one of the most popular gold ETFs in the US. And this fund is actually investing in SPDR. So the underlying asset is the SPDR. So that's number one that you need to understand. Um, if you're interested in this fund, do more research on the SPDR fund too. So you know the pros and cons of that as well. It's one of the most popular and been in the market for a long time. And GLDW is more actively managed. So they not only invest in the SPDR, but they also write covered calls or options on the same, and they provide 120% of the returns. The way this fund works is a little different from the covered call funds, but I'll explain to you that part as we go ahead. Basically, the fund tries to give you the weekly distributions, and it gives you the 120% of the gold ETF's performance, which means there's a 20% leverage. 20% leverage means that the returns that you get from gold will be amplified 20%. So if the gold gives you 10% returns, it's going to amplify it, and GLDW is going to give you 12% returns. I mean, that is what is expected. There's no uh, guarantee that you will get that. It depends on the underlying asset's performance. If the underlying asset underperforms, if the price of the underlying asset goes down by 10%, GLDW is expected to go down by 12%. So 20% more. So on the positive side, you get more returns. On the negative side, you are, losing more. So it's a kind of double-edged sword. So you have to be careful about the leverage. And of course, leverage multiplies your returns. It gives you an opportunity to buy cheaper when the price is down. There are a few pros and cons to it. If you're a long-term investor, leverage helps you get that exposure and amplify your returns. But of course, you have those um, bearish moments as well when gold prices are down for several months. You will have to be able to absorb that risk. So that's something to keep in mind. Okay, let's move ahead and look at the basic features. Ticker symbol is GLDW and primary exchange is CBOE. Of course, you can also find it on other exchanges when you search on your brokerage platform. Expense ratio is close to 1%, 0.99%. Yeah, so the expense ratio is going to be high because of the active options writing. Assets under management about 16.5 million because it's a very new fund. Fund was launched October 30, 2025, and about 290,000 shares outstanding. Yeah, so it's a decent fund, newly launched fund, so you have to be a little careful and observe the history for another few months, like at least 6 months or 1 year, so that you can get a sense of the performance and how the fund performs in different market conditions. Right now, the gold prices are going up record highs. Or what if there is a 10% correction, 20% correction in gold price? That's what you need to observe so that you know what kind of risk exists and how the fund performs in those turbulent market conditions. So that only time can tell you. And these are the holdings. The fund holds the SPDR Gold Shares swap and also the SPDR Gold Shares. Swap is basically they get into an agreement to exchange the returns or cash flows and to replicate the benchmark's returns. That exact details or technical analysis of those contracts that you can get from the fund's website. You can go to the FAQ section and get that. So I'm not going into that into this video because it's just a basic overview of the fund. And since this is a new fund, yeah, it's important to give it some time, observe the performance. And let's look at the dividend side of it. See, the fund's price is around $56.72. Let me look at the dividends. Okay, the fund's distribution rate as claimed by the fund is about 29%, but it's too early. It's just 3 months performance. Don't go by these numbers right now. Let's look at the recent payouts. So every week this fund is paying out the dividend distribution. So it's pretty good for income investors. So the latest payout is January 21, 31 cents roughly. You can see that here. And prior to that, on January 13, they paid around 10 cents. January 6th, it's about 34 cents. So you can see there's a lot of fluctuation in the dividends. December 30, they paid 28 cents. And similarly in December 23rd and so on. Yeah, it's been moving a bit up and down. If you look at the chart here, you can see the fluctuations. They're able to pay about 20 cents roughly or higher. But there are some rare occasions like January 13 where they have paid less. Yeah, it's going to be going up and down. Like you cannot get a steady pace of dividend as of now. Or probably the fund will adjust it in the future. We never know. But always expect that it's going to be variable and there's no guarantees here. Based on this, it appears to be like they are able to get like close to 25% yields. But we never know what the future is. Because right now the gold prices are going up like crazy. Okay. Yeah. So that's the basic overview of the fund. And let me go through this part. How are the weekly distributions determined for the round hill weekly pay ETFs? So the weekly distributions are calculated for each week based on the proprietary formula that incorporates the reference assets, performance, and implied volatility. So this is the complicated part. Like they use a kind of a formula to come up with the reference assets performance and the implied volatility and use that leverage formula. So yeah, it's very important to understand how this works as a concept, but it is based on the proprietary formula, so we don't have access to that math actually. But based on what we see, the fund's performance has been decent. For example, show you the chart prices, like the price of the fund. It started in October 30th, about $51.35 roughly, $51.30. Now it is $56.72. You can see the graph, the price has been going up. So on the price front, the fund has been performing decently. And they have also been able to give decent amount of dividends, like around 20% yield. So far it's been going well, like it's about 3 months. But only time will tell how the performance will be in the future. So far, the good things I like about this fund is it has chosen a good underlying asset, like a SPY ETF, to start with, and then they have good exposure to the gold asset class, not the gold companies, but the gold ETF, which tracks the physical gold prices. and they have the weekly distribution, and weekly distribution is also amplified using the leverage. Leverage can be positive or negative, whichever way you want to take it. So these are the good things I found about this fund. But there are a few risks. One is the leverage risk. It can work, negatively if the underlying asset falls. The second thing is if there is a prolonged, downturn in the price of gold, or if uh, gold is going through a very, flat or a, down period. Yeah, in that case, you may have to hold on to this patiently until you see a recovery in the price of gold. So that's something you need to keep in mind, and this is more suitable for long-term investors who are okay with the volatility and leverage aspect. So if you are comfortable with that kind of risk tolerance, you can start looking at this ETF. But my recommendation would be to give it at least um, 6 months period to complete, or even 1 year, so that you can look at the past performance and also look at the performance across various periods of time. So I would recommend at least give total of 1 year time for the fund to prove its performance, and then you can look at investing into this. I hope you like this video on GLDW, and if you have any questions or comments, please drop them below. Looking forward to hear from you. Thanks and happy investing. Have a great day.